The United States economy is absolutely caught between a rock and a hard place right now. The Fed is absolutely screwed right now, and they know it. And now we're hearing from some of the Fed governors, which are sort of quietly admitting the truth. They just admitted that the US dollar is about to change in a big way over the next few months. Pay attention to what's happening. So, a couple of big news stories to get to that will directly affect your family and your finances in the next few months. So, you better pay attention to this. Okay, right before the Memorial Day weekend, Jamie Dimon, head of JP Morgan Chase, the largest bank in the world, fired off a shot heard around the world. He issued an ominous warning about the U.S. economy. It made headlines everywhere. And when the most influential banker in America talks, it's wise to listen. Whether you agree with his politics or not, it doesn't matter. Jamie Dimon said he cannot rule out a hard landing for the U.S. economy. For those unfamiliar, of course, a hard landing is an abrupt and severe economic slowdown, followed then by a period of rapid growth. So in simple terms, it's a crash, okay? It's a crash. And who gets hurt the most in a crash? Yeah, middle class and lower class individuals. That's who gets hurt. Dimon, of course, is being very candid, admitting that anyone who reads history knows there's a good chance of a crash coming. And that's not all. Dimon went on to say that the worst possible scenario for the United States economy is stagflation.
So I look at the range of outcomes. And again, the worst outcome for all of us is what I call stagflation. Higher rates, a recession, that means corporate profits will go down, and we'll get through all of that. I mean, the world will survive that, but I just think the odds are a little bit higher than other people think.
Of course, stagflation is a nightmare scenario where inflation keeps rising, unemployment stays high, economic growth stalls out. It's the perfect storm that economists, of course, dread, and in fact, they dread it more than a recession. That's why Dimon says what's happening in America reminds him of the stagflation of the 1970s in America. It was a devastating period for Americans, and it could do so again. Stocks would plummet, hitting 401ks, retirement savings particularly hard. Adding to this gloomy picture, JP Morgan's own internal analysts are forecasting market volatility, despite the stock market reaching record highs this year. They warn it could become very unstable very soon. The S&P 500, for instance, could fall by 20%, they say, by the end of the year. 20%. That's according to JP Morgan's chief market strategist. That is a significant drop, and it could wipe out a lot of gains that people have been relying on for their financial security. Imagine if you're about to retire and your 401k gets wiped out by 20%. Sound familiar? 2008, 2009 all over again? People who were ready for retirement, and then because of the crash, their entire retirement was wiped out and they had to continue working and never were able to retire. Let's be clear about what this means. If we face a hard landing or stagflation, the stock market will take a hit. Your 401k, your retirement savings, your investments, all of them at risk. This isn't fear-mongering. This is coming straight from the top bankers and strategists who are seeing the warning signs right now. Don't shoot the messenger, okay? But this is not just Jamie Dimon who's worried. It's the Fed. They are now admitting that they don't know what to do right now. The past week, during the Federal Reserve's meeting, they admitted that they're growing more concerned about inflation, with no immediate plans to cut interest rates. They've held the rate steady at a 23-year high right now. But here's the real kicker. Eventually, the Fed will have no choice but to cut rates. It's not a matter of if, it's when. And when they do, that's when the real trouble for the US dollar begins, because the market already believes that rate cuts are coming in September. It's penciled in. Starting in September, right before the election. How convenient, right? Right when early voting starts for so many Americans. They're going to cut rates. We know that this is coming. And then another rate cut likely in November. Again, this is what the market is telling us. So rate cuts, while intended to stimulate the economy, will actually further lead to a devaluation of the US dollar. And investors seeing the writing on the wall are going to dump their dollars. They're going to turn to commodities like gold, silver, copper, and other precious metals. These tangible assets are seen as a safe haven when fiat currencies start to lose their value. We are in a commodity super squeeze right now. We don't have enough. We don't have enough production. And the demand is off the charts. And when the US dollar gets dumped, people are going to flood into these commodities like you've never seen before. They're going to run into real estate, gold, silver, tin, you name it. Remember Europe and everyone else cutting rates, devaluing their currency? Investors ran back to the United States dollar, right? It was the only game in town. But as soon as the music stops, they're going to ditch the US dollar like a bad habit. And people like me will be pouring into commodities like gold and real estate, which I already am. But there's another big problem. We don't have enough commodities to satiate the appetite of all of these investors we're facing. And we're facing what's being called this commodity super squeeze, just like what we saw in the 1970s. Again, This is the 1970s all over again. Skyrocketing inflation, incredible demand for gold, silver, copper, tin, everything, nickel, but we don't have enough of it. Look at copper prices right now, off the charts. Look at gold prices right now, all-time high, off the charts. Uranium prices, all-time highs. Do you see a pattern here? I mean, heck, people are even stealing copper out of the Tesla charging stations. They're cutting the cords and stealing the copper. That's how bad it is.
It's a disturbing trend. Thieves targeting high-powered Teslas and other EV charging stations and stealing heavy cable for the copper metal inside.
So the bottom line is this, guys. The Fed is trapped between a rock and a hard place. They need to cut rates to stimulate the economy, but doing so will likely lead to a sharp drop in the value of the US dollar. People will leave the US dollar. It will trigger a mass exodus from the dollar into safer commodities. And that will destabilize the economic landscape even further. I hope you are preparing with your family right now.